You're listening to Real Estate Reality with your hosts, Greg Campbell, Luca Merrick, and special guests. Let's get right into it. Yes.
All right, so we have three topics for today with a bunch of subtopics. Obviously, the main topic, what we want to talk about, is what we're seeing in the real estate market. Now, I think it's most important to talk about the current mood. Are buyers back? Are sellers holding firm? What's the general consensus? What are you seeing lately in your boots on the ground experience? Boots on the ground.
Well, it really depends. I have a lot of clients that are actually coming back out of the woodwork as prices have kind of been trending downwards for probably the last 6 to 9 months. Sellers are kind of 50-50. Some people are realistic and looking at recent comparables, and then there's also a lot of people out there that are looking at comparables from 3-4 years ago and have some very unrealistic expectations in terms of what their home is worth in the current market.
Yeah, so it's a mixed bag.
Yeah, so I'd say there's a pretty even mix, but I have seen a lot of buyers coming back into the market now with the trending downwards. I think they'll continue to head that way in the near future.
Do you think that, have you been speaking with them about that you're seeing better prices?
Yes, there's been a lot of better prices, a lot of properties, especially in the price point of north of 1.5 to 2 million. I'm seeing a lot of price reductions in a lot of those listings, and a lot of them are sitting on the market for 6, 9 to 12 months with lots of price reductions, which is actually pretty common in a balanced market to have a lot of these high-end listings sitting a lot longer because the buyer pool is a lot smaller than it is for the things under $1 million.
Yeah, and I think everybody's just being a little bit more careful what they do with their money right now at this point because there's a lot of uncertainty in general. I had a good story about just pricing. There was one, I can't remember. No, it wasn't the one that we got. There was one that was listed. We were out with buyers a couple weeks ago, and it was listed $100,000 less than what they paid for it 3 years ago, 2022. So that was a case of smart sellers. They understood that they were taking a loss, and then they looked at what was going on around them, according to the realtor, and they knew the only way that they could sell and sell quickly was to be at that price, and they did. That's, for anyone out there that's listening, that's in the same situation where you're actually thinking of selling or you have to sell, you're going to have to take that into consideration and just make sure that you understand what's going on in your neighborhood. That's a big loss right now, and I think we're going to see more of it as prices slowly start to come down further.
Yeah, I would definitely agree, and I think anybody that bought in the peak of 2020, 2021, if you're looking to sell now, unless you have a very desirable property that's had a lot of money put into it, you will likely be selling at a loss. If you bought in the last 2 or 3 years, you can likely get your money out for the most part. But anybody that bought during the peak, I think you'll probably have to wait another 2 to 4 years minimum to be able to get the money back that you put in, especially if you bought in the bidding war stages where you had 10, 15, 20 offers in some properties and everything was going over asking, right? But that's just the way the market was. And what I was saying to a lot of my clients then was, if you're planning on buying this property and paying significantly over asking, just ask yourself if you're planning on staying here and are comfortable staying in the property for about a 5 to 7 year period, because if you're willing to do that, you'll likely be able to get your money back and perhaps a small profit.
Yeah.
Obviously property dependent and neighborhood dependent, but if you're planning on leaving earlier than that, you likely will be taking a loss on the property.
Whether it's big or small depends on how long they're in there. I mean, I don't expect to see much until some of the people that bought at the peak. I don't know when that'll come back. That could be 10 years. At the peak, they're saying in Toronto, I don't know if this is a Canada stat or a Toronto stat, but they're expecting, I think they're down already 45% from the peak in some of their markets.
Yeah, I could see some of the condos having that problem. They just don't hold value as well, especially in Toronto, right? There was a huge condo bubble that's definitely burst and it's on its way down. But one of the biggest drivers of the high price points was a lot of people speculating on the market, just assuming things would go up and up. And I mean, people that bought new builds pre-2019 and 2020 that were closing in those periods of time, some of my clients, upon moving into their new build, were up 200,000 or 300,000, right? So a lot of other people started to hear of some of these large returns and started buying new builds, right? But the builders caught up in terms of pricing and also started to forecast the expected increases. So once the market slowed down, there was people in Ottawa that were buying townhomes for 850,000. Now townhomes are back down to 750, obviously depending on size, location, and upgrades. But there's about $100,000 to $150,000 price difference in townhomes alone in some of those areas that people were speculating on. So
Yeah.
you agree to pay a large sum, you go to close, and then you have a lot of problems because then the properties aren't appraising for what you paid for them, and then people have to come up with a lot of extra money. And then you translate this into Toronto, where these valuations now had like a $300,000 or $400,000 price gap, as opposed to the $100,000 price gaps that we were seeing in Ottawa. That leads to a lot of people unable to close, a lot of vacant condos, or people just being forced to close and then sitting in properties where they paid $700,000 for a condo that's now selling at $550,000.
Yeah, well, and we've seen that personally. We've had a couple clients who bought new. They wanted to sell. It was impossible. And now the prices are even less. We've got tenants in them, right? And then they message me every once in a while. They're like, how are the prices? I'm like, well, it's 25,000 less than the last time you asked me. And they're just like, they're lost. It's a loss. They're going to have to hold on to it because it's not going to get better anytime soon. Okay, let's move on. Conditional offers. We know that almost everything nowadays is conditional unless you've got an exquisite property priced way below market that's incredible. You may get multiple offers on it. We still see it happening occasionally, but most have conditions. But you mentioned, and our last four, just for the general public here, our last four offers, I should say, on properties that we had listed for sale contained what's called a first refusal, a right of first refusal, or a conditional sale with an escape clause.
Means that the people that are buying the property will only purchase the property if they are able to sell their home within a certain time period. So you would still go through the inspection, the financing clause, assuming that those are all fine and you come to an agreement there. The last piece is the buyers actually being able to sell their home. And in a much slower paced market, this becomes a lot more common. Obviously, this protects the buyer. It doesn't, because you can still essentially force their hand if another offer comes in and you can bump that first offer out of the way. But the people that had the original offer in are able to remove or fulfill the condition of selling their home without actually doing it and still close on the property if they really want it. The way the market is now, a lot of people are unable to carry two mortgages at once. So they're kind of forced to sell their home in order to be able to buy yours. There's a lot of work that goes in on our end in terms of seeing how confident are these buyers that they can actually sell their property. We'll often ask to see what property is for sale, take a look at the pricing. If it's priced extremely high, we'll advise our clients accordingly whether we think we should accept that offer or not. If the house is priced very well in a good neighborhood, we're a lot more likely to advise our clients to consider accepting an offer with a right of first refusal if we think there's a good chance of their property being sold. But it's very, very common in today's market. What do you think, Greg?
It's very common. And we did two that were completed. We've got one in process, and then we've got one that fell apart. The buyers sold their house, but after inspection, it found that they had mold in their basement, so they had to pull out. So then our listing is back on the market. And I think that's literally our last four sales on properties that we have listed for sale, right?
Yeah.
So that's a pretty, I've never had that before. We're 4 back to back, all first refusals. So something to consider if you're out shopping. Make sure if you do need that condition in the offer that your house is ready to sell. Most agents won't even consider it unless you're ready to list it within like a couple of days if you're offering with that condition, and that you're priced appropriately for your neighborhood and for the market. Like if you really want to move, get it done. Otherwise it ties things up and time goes on and everybody loses. So just keep that in mind. But it's a good tool to use, especially in a market like this. Now let's get into price stability. Price stability. Are we plateauing? Are we rebounding? Or are we heading for a further dip in price? I think we all know the answer to this. You and I know the answer to this.
I think we know the answer to this, Greg,
Yeah.
but give me your thoughts first and then I'll chime in.
My answer is we are heading into the quietest time. First of all, September, we'll get back to this after, but September had the least sales across Canada than in like many years back, apparently. It was usually because September picks up after August when people are back in school, like around mid-September, but it was the least amount of activity in years. And we're heading into a quieter time. Generally, I like to recommend people shop for homes starting in November all the way through to the end of January, because you generally find better pricing. Not as much selection, but you can find better pricing. My take right now is that the prices are going to drop heading into winter. And then when spring comes around, the prices will be similar to what they are today. That's my comment on my experience in the industry, where I think if your house is worth, let's say, $650 today, and you're saying you're going to wait till spring because you want $700, I think you're going to get $650 in spring.
Yeah, I would tend to kind of agree as well. Wintertime, we typically say to most of our clients, is a great time to buy, because people that are selling in the wintertime often cannot wait till the spring or are unwilling to for, financial reasons, family reasons. Could be a wide array of things, but generally speaking, properties are going to present better in the spring and fall. In terms of just photos, when you're doing inspections, if a roof is covered in snow, you can't get a good look at it. The foundations are often covered. Spring is kind of nice because, as the snow is thawing and stuff like that, you can see if there's any kind of water coming in. You can take a look at the roof. You can test both the furnace and the AC. For those reasons, it's a little bit easier. The sellers were supposed to disclose ages of certain things, and if the roof is in really bad position, they tell you it's a new roof, they're going to get into some legal problems there. So everything's kind of based off of trust as well. But as a buyer and a seller, you have to do your own due diligence and make sure that for anybody else, you protect yourself, your money, and your most valuable asset.
Yeah. So what are we doing? What are we doing, Luca? Are we heading for another dip?
I think we're probably going to head for a slight dip, and we can tie that into a couple of the topics that we'll kind of be covering a little bit later.
Yeah.
In terms of interest rates and the supply. But as Greg was kind of mentioning, this past September had almost 2,900 new listings for the month of September. That is the highest amount even during COVID. So in the last 10 years, this past September saw the most amount of active listings and the least amount of sales. So,
which is crazy.
Yeah, and that just basically means there's a ton of properties that are for sale and people aren't buying them, right? So when that happens, and then there's other homes that are going to be coming to market that are also going to be wanting to sell. So the competition on the selling side is going to increase, ties back into making sure that your home is priced properly, because if it's even slightly overpriced, buyers are just going to go past it and go look at something that's a better value, right? Obviously, there's a couple of exemptions and stuff like that of certain pockets where homes sell very, very rarely, and those are always going to be in demand. Mm-hmm. But as a general statement, you have to get the pricing bang on very early on, because you only have one chance to make a great first impression.
One chance. And this is a thing. We have so many conversations. We just recently had another one where there's still sellers out there that want to try. They want to try to sell at a certain price. I'll tell you, sellers, the trying is over. There's no more trying. There's only real data and real doing. Do not try, because you will fail. And then you will sell for less than what you will sell for if you price it properly from the beginning. We've gone through it with 3 listings this year. We've seen $100,000 price drop, I think a $200,000 price drop, and another like $90,000 price drop. And that wouldn't have happened if they had agreed to list at what we mentioned at the beginning. We wanted to help them, so we tried, but the conversations are getting harder, and especially for the people that want to try. So keep that in mind. All right. How media narratives differ from what agents are actually seeing. This is a hot topic all the time. And I want to leave this one in. Thanks, Luca. Conversations I have with people is so frustrating, because people still believe, even when they're seeking a professional, they will generally lean more towards what they're hearing in the mainstream media versus what someone who works specifically in the business, in a neighborhood,
Or from a family member
Or
that bought
from-
their house 20 years ago.
Very good. Another very good, Luca. Very good. That's another one. But we see it all the time. I think the one thing that I'm seeing now, I think you'll agree with this, is that rates aren't affecting people as much as they were when all of a sudden rates became the biggest deciding factor on how people were going to buy homes, right? Because that was never really a thing before. And then it just became this whole rates. What are the rates? What are the rates? And then now I don't see it as important with new buyers coming in anyways. They're just kind of like, we're ready to buy a house. This is what we can get, whatever. There's never really, I'm going to wait for the rates to come down again. You know, they just, those conversations aren't the same as what they were.
No, and I think that's largely due to just the, like, basically record lows we had during COVID because of the pandemic and how low the rates were. So you could borrow it for almost nothing. And then we kind of had the complete opposite out of the blue, where rather than slowly easing into increasing rates, they basically just decided to jack them up by 0.5%, 0.75, an entire percent. And these were basically unprecedented interest rate increases for Canadians to see. Sure, you had some 18, 19% interest rates a long time ago when homes were significantly less and when income to house price ratios were significantly less, right? But with inflation and over the last 10, 15 years, housing prices have skyrocketed, incomes have plateaued, so it's just making it a lot more difficult for people to enter the market, and the average age to own a home has drastically increased for young Canadians across the country in the past 6 years.
Yeah, I mean, what was the number? It was almost 75% of young Canadians have just they're almost at the point where they've given up the possibility or the dream of owning a home. They've just kind of like, forget it. They're not even there anymore, which is also troubling, because if that's an actual thing, then what happens with all the new product that eventually will come out, right? If in people's heads now, they're kind of like, oh, maybe renting is the way. I'll have more freedom, right?
Yeah,
not as many in home ownership. I mean, it could change, but the trend right now is disappointing. It's very sad for Canada.
Yeah, and I think between people the age between 25 to 35 that are getting into the market, I think more than half of them are, dependent on a grandparent or parent to gift them the down payment, because the problem is not for young Canadians to be able to make the payments. I mean, they're already paying absurd amounts in rent, right? It's the rent. If you're paying $2,500 a month in rent, how are you supposed to save $50,000 or $60,000? And then you need a partner that's also saving that amount. So you have 120% or $120,000 saved up for a $600,000 home in Ottawa, which is just slightly below the average for Ontario.
Yeah, and then you've got the family members, a lot of boomers or just below that demographic that pulled the equity out of their house to help their kids get a place, especially during COVID. And now they're sitting there where their property's losing value. Their investment is gone into their kids, and now they've got nothing. So they don't want the prices of homes to go down, but there's nowhere else to go but down right now.
Yeah, it seems like that's going to be the trend for a little while, and I anticipate that too. The fall market is definitely a lot weaker than it is in recent years. And that's probably going to tail into the winter time, but it might not be a great time for sellers, but opens up a lot of opportunity for buyers, right? And you never really know where the bottom is, but interest rates right now have come down quite a bit, so they're kind of back to reasonable pre-COVID.
Very reasonable
pre-COVID rates. I'm seeing some 3-year fixed rates right now that are
3.89. I saw that one.
3.89, 3.5, and stuff like that.
That's a proper mortgage rate.
Yeah, like that's a normal mortgage rate.
It never should have gone below that, in my opinion.
No, it shouldn't have, and obviously it shouldn't have gone up. But what goes up must come down, and what goes down must eventually come back up as well, right? So
yes,
it's not a matter of, sure, you can get lucky and time the market, but essentially it's just about making a smart investment for your current financial situation.
And that's sound advice. What does a balanced market actually mean? We're in a balanced market, I would say, in Ottawa primarily.
Yeah, primarily. I mean, I would definitely lean towards the buyers having a bit more of an advantage.
Sure. Yeah.
Because of the amount of inventory that's currently available. And when you have a lot of inventory that's available, it takes a lot of time for that to catch up, because if you already have a surplus of listings and a shortage of buyers and you're just adding more properties for sale, you're just widening that gap. So I think especially leading into wintertime, I think the gap will kind of widen a little bit more, and the buyers will definitely have a lot more cards. Specifically, even from what we were seeing, we would almost never recommend a client to accept or even consider taking an offer that has a right of first refusal. But, when you've been on the market for a while and listings are sitting, you're a lot more willing to work with a buyer that has a property for sale, because if you're slow selling your home, you also understand the struggle of that person who's trying to purchase a home, but with the understanding that they also have a place to sell. So I definitely think it's definitely more geared towards buyers than sellers at the moment.
I do agree. But on paper or online, they will tell you that it's a balanced market, but we're seeing it in favor of the buyer.
Exactly.
Okay. So interest rates, where do we think they're going, and what does the future look like for Canada in 2026?
Okay, well, I'll start it off. We kind of mentioned where the rates are right now. We're seeing some of the rates below 4%, which is a pretty healthy place for them to be. I'd like to see them around like 3.5%. And I can see a interest rate hold or a interest rate decrease slightly of a 0.25%. I mean, it really doesn't have a massive impact. The last 0.25 cut changed one of my payments from like $670 down to like $654 on a weekly payment. So you're probably saving an extra $60 to $70 a month, which obviously helps, but it's not gonna make or break anybody making their mortgage or some ridiculous savings. But I wouldn't, like, any rate decrease is obviously going to help anybody that's sitting on a variable rate mortgage. Anybody that's has a fixed mortgage, it's not going to help you or hurt you. But if you are coming up for a renewal soon, having the rates go down will be beneficial, because you'll likely be able to lock in a more reasonable rate. Obviously, if you go at the super low rates in 2020, 2021, where you're coming up on that 5-year renewal, you're definitely going to be having an increase in your payments. And I could see a lot of Canadians having problems with having their mortgage renewals coming up. I think there's about 1.8 to 2 million mortgages coming up for renewal in the next 12
year.
months.
Yeah.
In the next 12 months, with bulk of those coming up in June of 2026.
So that's the month to look out for, June of 2026. How many people are going to default? Well, I mean, I guess they're not doing. I mean, they might have to sell just because they can't afford.
Yeah, they might not be able to
do it.
They might not be able to afford the new payments, or if they're kind of looking at ahead for things, they're planning on selling before that point in time, potentially taking a loss or finding some extra money to be able to carry those mortgages, or maybe they're moving into a cheaper home and then renting that out to kind of offset some of that cost. But the good thing is the rates were at like up at 6%. Now we're down back to sub 4. So
yeah, so at least it's closer. It's not as far off as it was before. I think a lot of those people that had like the 2% worried about if they had to jump up to that 6, that's like a total nightmare, unless you were doubling down on your payments.
Yeah, exactly. But I think a lot of people will actually be okay, just because they have kind of been decreasing. And I mean, like the banks and mortgage companies are looking at that, right? They're fine with a certain number of people defaulting, but you obviously have an entire collapse if there's a large number of people that can't make payments, right? Which they won't allow to happen. So I think they'll slowly continue to keep dropping or holding the rates the same leading into the first and second quarter of next year, just to make that transition from some of those people that had 1.5% to 2% to be able to kind of transition into a 3.5% mortgage, as opposed to like 5.5%, 6% that we had in 2 or 3 years ago. So
the big takeaway here is talk to your lender now if you're renewing next June, just so you understand what it really looks like. I know there's people in Niagara, like down in that whole south of the GTA, or I guess it's still considered GTA-ish, just collapse. Like the biggest collapse of real estate in Canada is down in Niagara right now. Like the numbers are just ridiculous. People that paid like $3 million for a home are selling it now for like $1 million. There's really big losses down there. I think the average loss now is like 750,000 on single family homes in that region.
Wow.
Yeah.
Like that is an appalling
It's
stat.
insane.
Like
It's
that's
like
more than a single family home in Ottawa.
Yeah, exactly. So you can be thankful that you own property in stable, good old stable Ottawa. Good old stable stability.
Word of the day, stability.
Stability is the word of the day. Investor confidence. This is a good one because the way that I see investors, the only way you can invest in real estate right now, let's say in a big city, a bigger city like Ottawa, is if you have tons of capital. Like if you're putting down a lot of cash and you don't need to sweat it, then sure. But if you're just like an average homeowner and you want to get into real estate, it doesn't really make sense. Right now, I think it'll make sense within the next 12 months, maybe again. But I don't know. What do you think about that?
Yeah, I kind of tend to agree. I think regardless of what the market is, there's opportunity available because there are going to be houses in nice neighborhoods that some boomers might be selling that have been there for a really long time, have taken care of the place, but haven't really renovated or updated it. They'll make good money on their sale regardless. It's a good opportunity for a younger couple to be able to get in there and build up some sweat equity.
That's a very good perspective. And that's 100% true right now.
Yeah, I mean, so I think there's always opportunities for investors. Are they running back in and offering on every property? No, I don't think so. But you have a lot of options as an investor now, right? So you kind of have to pick and choose your spots in terms of the right property in the neighborhood. And when it comes down to investing, you're making your money on the buy, not the sell, which a lot of people get mixed up, right? It's just like, oh, I can put $200,000 in this house and get X amount out of it, right? But a lot of your profit is going to come in on if you're able to purchase that house below market value for that area, right? If you're buying one of the most rundown properties on the street for significantly lower than the neighborhood average, you have a lot more money to play around with to be able to get a great return on that property. So sometimes it takes offering on multiple different properties at price points that, you know, you can make money off of and just knowing when to walk away from a bad deal.
Yeah, and there's some new builds. I mean, most of you listening will know that new builds were the hot investment, like leading up to the pandemic and even post, just because you generally historically make the most money on a new build, and you buy something that doesn't cost a lot, you rent it out, or you move in, whether it's a move in or your first investment. But right now, K-Van has in Orleans, they have 3-story towns with a garage that are selling for $430,000, $60,000 deposit, I think it is. That's not bad for a new build that are going to be ready in 2027.
Yeah.
So my buddy just told me yesterday he bought one because he couldn't believe how reasonable it was, considering they'd probably rent for like $2,300.
Yeah. So even if you don't end up moving into it, you can probably break even or make a slight profit, which on a rental, which we haven't seen in the Ottawa market in a very long time because of how expensive everything's been. So I mean, that's a great point. There's a lot, like in builder, prices have kind of come down quite a bit, right? It obviously depends on the size of home and neighborhood, and you're going to get some variance there. But I mean, for a product like that, you shouldn't have very much trouble.
At least breaking. You won't have problems renting it out and breaking even, I don't think. And just for perspective, for some of you, we have clients that bought new during the pandemic, so top dollar, and they have tenants in there, and they're still losing $1,000 a month because the mortgage and property taxes and everything that comes along with it. And they can't sell because like I said at the beginning, they're going to be selling for like $100,000 or more or less at this point, and they can't get any more rent. So be grateful that you're not one of those people. And if you are, we wish you all the best with whatever decisions you have to make. It's just how it works, right?
Yeah, you just kind of have to ride it out sometimes if you kind of make a poor choice. But it's, even if you're taking that $1,000 loss, it's $12,000 a year.
And the equity
is going to accumulate and build, right? It's still going to be somebody else that's paying for your mortgage for an extent anyway. At least you're not paying for the entire thing. Yeah. And just having to eat all of that. And depending on how long it takes, you just need the prices to come back to what you paid for it. And then all of that equity that you're going to get your entire down payment back, and then whatever equity or the amount that you've paid off on the mortgage at that point in time.
And then the pain may be worth it.
Yeah. I've had this conversation with friends, family, and past clients is what level of stress are you able to endure for what period of time is going to have the biggest impact on what the best decision is for you, right? Like for some people, they can't deal with that level of stress, right? So they're just going to sell it, take the loss and move on. Other people maybe don't want to take that big of a loss and are going to take a smaller monthly loss on renting it out for less than what their payments are up until it catches up. And those are really kind of your two options. And I mean, if you've overpaid, I'm not even going to say overpaid. You paid market value at the time for your house, and now it's worth less. If you're staying in that home if you're staying in there for 10 years plus, you're going to be able to get your money back out of the home, right? So it's really the only people that are kind of getting hurt are the people that speculated in the beginning in terms of thinking it's never going to slow down and it's just going to keep going up and up and up, which when you look at history, we know has never been the case. Eventually, you're going to have a slowdown or a dip of some sort, and if that's how you're basing financial decisions off of, you're going to be in trouble sooner or later. So I think, but I mean, Ottawa as a whole is very, very stable because of we have very high salaries in Ottawa due to government employment and the city jobs being so well paying, right? So we have probably like $30,000 or $40,000 more on average per person in Ottawa than the Canadian average is.
No, it's true. So what do you think, where do you think the rates are going to go in the next 12 months?
Next 12 months, I think it'll be relatively sideways. I could see maybe one or two more small drops of maybe a 0.25 and then probably a lot of rate holds, but we'll kind of have to see what the spring entails. But I think in the next 6 months, I anticipate probably one rate drop and then some rate holds. But
I agree. Drop and hold, but I think it's going to go up again at some point next year. With everything else going on, I just don't know how they're going to sustain it anyways, we'll wait to see. I mean, it turns into a political, economic
there's not really
nightmare.
any point of speculating. I'm kind of the other side where I think a lot of the stuff that's going on with global politics, tariffs and stuff like that, there's a lot of fear and there isn't as much money moving around as when there is when things are very prosperous and the outlook is positive. I just don't think the Bank of Canada can even consider. I can see holds and slight decreases, but I don't see an increase in the next 12 months personally.
Okay, there we have it. Just a quick article here from Robert Hogue. Robert Hogue is the assistant chief economist at RBC. He says the country's housing recovery would remain subdued as persistent affordability challenges, economic uncertainty, and regional disparities continue to weigh on activity. Quote, we expect resales to continue to recover gradually in the year ahead as lower interest rates and in some markets lower prices stimulate demand. However, the process is unlikely to be smooth with persisting economic uncertainty, labor market softness, and affordability issues poised to create waves. September's setback serves as a reminder that the housing market recovery remains vulnerable to external shocks and shifts in sentiment. Yeah, home sales fell 1.7% in September compared to August, marking the first decline since April. I think that's going to be, I think we're going to see 1% drop in October as well, all over. So an alarm going off there.
Yes.
Some regions, Victoria, Regina, Saskatoon, Winnipeg, Toronto, Quebec City, and Sherbrooke saw increased activity. Major centers including Vancouver, Calgary, Edmonton, Kitchener, Waterloo, London, Ottawa, Gatineau, Montreal, St. John, Halifax posted declines. Mixed regional results highlight the fragile and uneven nature of the recovery that's underway. So there you go from, RBC economist. But that's another one of those things. The media, are we influenced? Are we not? Or do we deal with what's in front of us? What do we want to do? What house do we want? What do we want to pay? What can we pay for it? What's our payment? That's what you got to do in real estate. It's like, if you want to get something, if you're ready for it, do it.
To add on to that, I bought my house that I currently live in during COVID, and asking price of the house beside mine was $599, sold for $680,000, and there was a coming soon sign on the lawn next door. I called the guys, saw what they wanted, and they said the same price as their neighbor, and I just paid it. And my house is probably, done a lot of work to it and a lot of other stuff, but probably not worth much more if what I paid for it, despite the renovations and everything else that I did to it. But I don't plan on going anywhere, so I'm not really too concerned about the price. I was able to buy the house with my brother at the time, bought the house, and we're staying put. We don't plan on moving anywhere. We've kind of done some extensive renovations to the basement, so if we did want to move out, we would be able to rent out the top half, the bottom half separately, and would still be able to cover all of our expenses. So whether we stay or go at this point, it was not going to have any negative financial impact on us. But when we bought it, we understood that we would be there for a longer period of time. So we weren't really concerned about the market changing, or obviously our payments ended up increasing because we decided to go variable. And initially we were not planning on staying in the house for a long period of time. We were planning on doing some renovations and getting out and each getting our own place. But we just adapted to the market coming down, interest rates going up. So we just decided to stay in the house a little bit longer than we were planning on, do the renovations that we were planning to do anyway to increase the property value and make it more feasible to rent out the house into basically 2 individual units through our renovations. And now we're back to a pretty good spot. The variable interest rates have come down quite a bit. So our payments are getting a lot closer to what they initially were when we started our mortgage journey.
Yeah, that's good. And the idea of with the basement unit there, it's super convenient. Because if you ever really wanted to just have that as a unit and rent it out, you could.
Yep. And I mean, for those of you that are looking to get into properties, looking at any places where, you can rent out half of the home that has a separate entrance, has its own bathroom, and if you put in a separate kitchen down there, it's going to greatly offset your mortgage, right? If your mortgage is $3,000 a month and you can rent out that one separate unit for $1,500 to $2,000, your debt obligation now drops basically in half. So what you can afford significantly increases and if you're even just moving in on your own and you want to rent that out to supplement your income or to supplement the amount that you have on the mortgage payment, it's a really great way to get into the market and build up some equity and basically cut your risk in half. So really, really good way for those of you that are looking to get into the market would be homes that can be converted into a legal secondary dwelling, or just maybe perhaps you're comfortable with renting out rooms. There's a lot of different things you can do and get creative with if you'd like to get into the market and start building up equity and investing in real estate. It's never too late to get in.
It's never too late to be great. It's never too late to be great. A few things I want to mention. Let's get into housing inventory, housing supply and inventory, the root of it all. Are builders slowing down or gearing up again? Now, I'll be honest, for me, I haven't paid too much attention. I know that a lot of the builders stepped back. There hasn't been as much product coming out other than things that were already put into play prior to these recent changes economically in Canada. I don't know what you're seeing, Luca, or is it just similar to Mike?
I think it's been pretty steady. There's been a lot of red tape around builders for a long period of time. They talked about removing some of the red tape in order to be able to increase supply and stuff like that, but not to get into politics too much. A lot of our GDP is linked to the real estate market in Canada, and it's not in the government's best interest to have too much of a supply, because once you have too much inventory, prices come down, and that hurts a lot of the older generation that's now starting to retire, and a lot of their wealth and retirement plan is linked to the equity that they've built up in their houses. So I think they've kind of have a stranglehold on builders in terms of how much they're allowing them to build and how quickly. I think it's been pretty steady. I haven't seen too much of a decrease or increase in supply in terms of new build. I'd say probably 90% of people are buying existing homes and maybe 10% are looking at new builds.
So generally, resales back where it was before and taking priority over new builds.
Yeah, I would say the same. Occasionally have a couple of clients considering new builds, but there's been a lot of issues with new builds in recent years. A lot of people cut a lot of corners during COVID because of how high the demand was. There was a labor shortage. There was a lot of stuff related to COVID, which created its own set of problems in terms of how quickly you could work and get things in and how many people you could even have on a work site, right? So that kind of created a backlog. I think that backlog is gone now, and I think the construction levels of quality are starting to come back because it's not as much of a gold rush, would probably be the best way to describe it, as it was before. So I'm seeing stability in that market for sure. Pretty steady, I think, in terms of what's being built. But one of the trends that I have been seeing recently is some builders that are further out of the city. One of our colleagues was talking to, and they were initially planning on selling a lot of these single family homes and townhomes but they're now converting some of those chunks into rentals because they're not able to get the price point that they initially wanted for the builder to make whatever margin.
So that's a really good conversation, because I have seen that a lot, where I keep hearing of buildings going up and then they're suddenly converted into rentals because they're not selling enough units and they need to do something. So there's more of that happening for sure. Another type of product which has come new to the market over the last couple of years is building, kind of like you said, even single family homes or townhomes, and converting them into SDUs, secondary dwelling units, and then renting out two, or in some cases, if it's a single family home, they'll rent it out. If it's a large detached home, I should say, they'll turn it into a three unit, one level. A bunch of those happened out in Rockland a while ago. That's pretty interesting to see. That's just adapting to the market. It's smart for the developer and the builder just to kind of move forward instead of waiting and hoping that they're going to get the money that they're never going to get.
Yeah, exactly. And it's kind of to the point that I was making before, right? You kind of have to adapt. If the market changes and you have a property, you have some flexibility, right? You can do some renovations to increase the value. You can put some sweat equity in and help do some of those renovations on your own if you're handy enough. You add an additional unit, or you split up the home into two, maybe a little bit less space for yourself, but you can kind of manage it. And builders are kind of doing the same thing, right? They can't get the price that they want for the property, so they're resorting to renting in the short term, continue to keep building stuff. They're going to get some income from the rental, right, as opposed to the bulk from the sale, and they can keep rolling with building additional homes. And once the market comes back to where they want, or once that tenant is ready to move out, reevaluate the property, see what it's worth, and see if it makes sense for them to sell it or continue renting it.
Yeah, so there's options. There's options. Something just I wanted to touch on in terms of inventory. There's still so many properties that are vacant out there. And that's, buyers, just pay attention to that. When you go into a home that's vacant, usually it automatically feels like it's not as nice as it would be if it was furnished. It doesn't feel as cozy. It doesn't feel like home. And a lot of you will miss out on solid opportunities to take on even if it's a small project. Sometimes we walk into a vacant home, it's priced perfectly. There's maybe a $10,000, $15,000 bit of work that needs to be done that you could roll into your mortgage. And a lot of buyers just want to walk in and feel the love like it's the perfect house. And I don't disagree with that. But then when you're looking for something and you have a certain budget, when you find a property like that, it's just a matter of looking at it with different eyes and taking advantage of it. Because I've seen a lot of vacant homes that buyers just walk out of, and I'm like, man, it's a great home. It's a really good home. If it's older, that's fine. But if it's clean and well maintained, why not take it on, live in it, improve it as you go?
Well, those are the ones that are great opportunities, right? A lot of people that, if you have 10 people that walk into a house and say, "Oh, it's my dream home," we're all going to want to buy it, right? The sellers did a really good job of presenting the home. Their realtor did a really good job of positioning the home as well. But that could come down to some staging, pricing, and taking care of the property, right? And then that exact same home, without the staging, without a fresh coat of paint, and without proper presentation, could sell for $20,000 or $30,000 less, right? And we often see people that are trying to cut corners and save some money, either on trying to go for a commission free, where, you know, they take really bad photos of your house, they throw it on the MLS and hope for the best, because you want to save, you know, $10,000, $20,000 in terms of fees, or you don't want to pay $3,000-$4,000 for staging, but you're going to get all of that money back on the back end and more, and the property's going to sell sooner. I mean, we can pull up some stats on next week's show in terms of how much faster homes sell for when they're staged as opposed to vacant, and the time and the days on market difference of a home that's staged and well priced versus one that isn't. And it doesn't take a rocket scientist to be able to, just simple logic to understand that a home that's empty and looks like it's been uncared for is going to sell for less than the exact same home that's been well taken care of and looks like it's move-in ready.
On the other hand, if a property is a mess, it's better to clean it up and leave it vacant. Stage it if you can, if it makes sense. That's another quick question for you. We've got a listing coming up, and it's older. Great neighborhood. It's older. Went in and I was with Linda and I said, everything in the house has to go. This house has to be empty. I said, like, you're going to get, your offers are going to be terrible. Because they've been there forever, but there was no real love.
There was no theme.
It was just kind of like a bunch of things, right? So anyways, the question was, once it's ready, you'll come and see it, but it's like, do we even stage it because of where the market is now, or do we leave it vacant? That's where we're at, because historically a staged home will sell but it's also if it's priced well, right? Like, you can't stage it and think you're going to get $100,000 more. So with this one being in the neighborhood that it is, on the lot that it has, it's like, what do we
a lot of these conversations come down to what is the seller's situation, what is their budget, and what are they comfortable or uncomfortable doing, right? Because if you're going to overprice a home, and no amount of staging is going to help you there.
No.
But if you
we've been through that.
We've seen that dozens of
and
times
we hate
over the
it.
years. Yeah. And I mean, it's horrible for everybody, right? Like, the seller's not getting the result that they were hoping for because they've been either misled or refusing to look at real numbers and stats. And then you kind of have the problem of where you're chasing the bottom almost, right? Because you're doing price reduction after price reduction, but you've already missed all of the serious buyers that are the ones that are going to be in. Like, there's a massive drop off in terms of viewings after the first 14 days. So if your house in the current market doesn't sell in the first 14 days, regardless of what your asking price is, forget about getting the offer at asking. Maybe one out of 100 times, maybe you'll get lucky where somebody comes in a month later and absolutely loves the home and needs to move quickly due to work or something, some outside factor. But generally speaking, you're just going to be having to do price decreases until you get it right. But you miss that boat of the people that actually have the capacity to be able to buy that home. They just move on to something else that's priced well, and they just end up buying that, right? And then you adjust your price, but then it's too late. Now you have kind of the stigma of the amount of days on market, and then you're going to start dealing with lowballs. Whereas if you had it presented properly, the home would sell. I mean, we've had the problem sometimes, recently in the past year, where we priced a home perfectly. It sold too quickly, basically, in the opinion of our clients, and there was some discomfort there because they felt that the property was underpriced, right? But you look at the market as a whole, we looked at the other listings that were sitting on the street, and some of them just canceled and never even
came back.
They never even came back, and they've just been completely taken off the market, right? So sometimes you do way too good of a job that, something sells too quickly, and then you kind of have that problem sometimes as well. But you just kind of have to look at the stats. You have to look at the data. You have to look at things in your neighborhood or a couple of the neighboring areas and see what those things are selling for, how your home stacks up. Because we're obviously on the selling side trying to sell for as much as possible. It benefits everybody. And then on the buying side, we're just trying to get our clients the best home for the best price, right? And we'll aggressively negotiate in order to be able to do that. But it looks different for every single property, right?
It does. And I think that what's important to everybody here, for buyers, sellers, realtors, is that make sure when you're communicating with each other that there's an open line of communication, and that there's always, when it starts getting into the serious discussions about numbers and where things are going, make sure it's all corresponded by email so that there's an official record that's saved and, won't be lost. Because phone calls are good, and phone calls are very good, especially if you're working with friends too. But then things can change pretty quickly when a phone call is not documented, and then someone says, no, you said this. And that goes for everybody. For us, for buyers, sellers, just make sure that you're all on the same page so that you don't have to have some of the harder conversations when you feel like the process is moving one way or the other.
Yeah, I mean, open line of communication, and you might start with a certain strategy. Market might change, or for whatever reason, maybe if the home is priced really, really well, maybe there's something else in the area that somebody else preferred more, right? And then that sells, and you lose kind of some of those buyers, and you have to readjust that strategy, right? So there's only so much you can do, and then there's going to be some adjustments to be made. But if your property's on the market for the first 2 weeks and you have less than 5 showings, it's likely a problem with the price and the marketing. But 9 times out of 10, the price is too high, right? You're not even getting people through the door. So I mean, the most 2 basic things is having really good photos. And I mean, I don't know like what the stat is, but I think 90 or 80% of people that start looking for real estate start looking online first. So you're clicking.
I think it's probably 100% at this point.
It's probably pretty close to that, but people are looking at photos. So if your home looks horrible in photos and they're not professionally done and it's not presented well, you're not even going to get people through the door, right? And then if you also have incorrect pricing, I mean, the home's just not going to move, right? And in terms of the selling side of things, like pricing, marketing, and just exposure to the property are absolutely vital in a slower market, right? You're looking at 2021 where you throw a sign on the lawn and the home gets sold regardless of what condition it's in, how well taken care of it's in, when people are just getting significantly over asking, right? Now it's the total opposite, right? It's pretty normal for...
It's how it's supposed to be.
It's how it's supposed to be, where it takes sometimes 30, 60, 90 days to sell a home. The home has to be well priced and well taken care of, right? Otherwise, the buyers have so many options, they're just going to go somewhere else. And the ones that are not well presented, not well priced, those are going to be sitting on the market for long periods of time. And then you'll get what I call vultures, are people that come in and just hit you with low ball after low ball, right? They don't care, right? You're going to get some investors or some people that are opportunists that are just going to throw something at you. And if your property is vacant for 6 months, you're not renting it, you still have mortgage payments on it, you might be willing to take 50, 60,000 less than what the property's actually worth because you're desperate.
Mm-hmm.
And we see that all the time too. It's an opportunity for buyers, sucks for sellers, but it's just the way it works. The pendulum kind of swings one way and the other. Sometimes it's the benefit of the buyer, sometimes it's the benefit of the seller, but ultimately it's just, getting good professional advice and then positioning a property well when you're on the selling side.
Information, be informed. Let's get into creative solutions. Modular homes, densification, purpose-built rentals. What do we think about this? The hot topic right now is obviously modular homes. I heard that K-Van's doing that. They got the contract for that, for the government modular homes.
I have not heard that, but I could see that being as a possibility. I dislike the idea of modular homes. I think it's just kind of lowering the standard for Canadians and kind of really getting rid of the Canadian dream of, being able to own a standalone property that is not a modular tiny home that I don't think Ottawa should be turning into Vancouver, where people can't afford housing and are now renting out rooms or converting your garage into like an additional living space, right? So, I mean, I think you just have to increase the supply overall, and that'll bring down the pricing.
And the question about the modular homes is always whose land's it on, right? Like if they're using government land, the land's going to be leased, so then it just becomes a glorified trailer park. Depending on like if it's a community of modular homes, I'm saying,
yeah,
which clearly they're doing. Obviously, if you have a piece of land that you have a house on, you're not going to tear it down and put a modular home on your land. You're going to rebuild a proper home, right? I keep seeing these images of modular homes in between proper homes in the city or something. I'm just like, what is this rendering for? Who's really going to do that? You could build a home that looks new and modern,
yeah,
but it's not going to be a little modular home unless you own a massive piece of grass 40 by 100 in the suburbs that's just miraculously been sitting there for 20 years.
Which doesn't exist.
Exactly. So yeah, it's going to be interesting to see how that looks. I think there's going to be a weird mind shift where people just accept it, and then that's how the new buyer is going to be living, is on leased land by the Canadian government, or leased land that's owned by the Indigenous community. I don't know,
or by a builder. Maybe,
I don't know where that's
developer.
going, but there's so many new things that are coming around in terms of land and land disputes in Canada right now. So we'll see. But more on that later. When the modular home information comes out, we will have it for you.
Yes.
On Real Estate Reality. Yes.
Intensification and densification, I don't see a huge problem with this. I think it's a pretty good solution. If people are tearing down older houses, if you can build 2-3 units, it helps. I think you kind of have to look at the neighborhood, what's available. Is there enough parks and green space to be able to accommodate an increase in people? And the infrastructure, because the infrastructure in Ottawa as a whole is pretty bad. I mean, we can see from our highways and everything else. I think there's just way too many people in the city, and the government never planned or had any foresight of the requirements or the demand on the transit system. Yet we're adding a lot of people to the population, which is, further adding to that problem. But if you can build If you can add 3 or 4 homes onto one piece of land, it makes sense. But, you're also, as the neighbor, going to be giving up privacy. You're going to be dealing with construction. So you kind of have to figure that out. There's going to be a bit of there's definitely pros and there's definitely cons. And then purpose-built rentals, we're kind of starting to see that across the city. There's buildings, all over Ottawa, a couple in Westboro, built by Azure and stuff like that are rental only. So obviously there's a demand for it. But at the same time, rental prices have been coming down pretty much across most of Canada, minus a couple of cities, for the past 6 to 9 months. So they're clearly, as they've kind of curbed immigration, there's also, and international students, there's less demand for rentals as well, which can kind of be concerning. So if you have a decreased demand on rentals and you also have a decreased demand on homes, people that are unable to sell their homes, that are looking for maybe renting it out as a solution, that's kind of getting diminished, because sometimes you need a certain amount to make the numbers work. Otherwise, you're just going to kind of have to be eating a loss. But people that are buying and investing into real estate need a certain rent level to be able to continue investing and contribute in that way, right? And when people are buying rentals and they're doing renovations projects, they're hiring people for those renovations, and they're typically adding rooms, doing additions, or updating homes to hopefully create additional housing or more suitable housing.
And that's what they say, Canada's built on housing, right? So, hot take, reality check. Canada doesn't have a housing problem. It has a land use problem. What do we think about that comment? It's kind of a mix of both, I think.
Yeah, I definitely agree. I mean, we have a lot of land. We have a lot of land here. We have a lot of resources, and we're just not using it. And everybody's just kind of basically, like 95% of our population lives on the border with the U.S. when we have all of this additional land and space to use, right? We just don't have enough people. So again, a bit of a political thing, but I think we need to create incentives for Canadians in Canada to be having children, so we can kind of have a larger population and be able to kind of build out and use some of the abundance of resources that we have here. There's a couple of countries out there that if you have 1 or 2 kids, you're no longer paying income tax.
Which is huge.
Which would be massive, and I think that would be a great incentive for people to have kids. It would definitely stimulate the economy and would add a lot of, obviously, additional people to the labor force and contribute overall to the betterment of the country as a whole.
Yeah, it's a good thought. I love the idea of it, but then again, Canada. Hey, so what does this all mean? What does it all mean? Episode 1, wrapping up episode 1 of Real Estate Reality. Greg and Luca here together for you. For buyers, let's get into this. We had a little section here for buyers and for sellers. So for buyers, why pre-approvals matter more than predictions. I mean, if you're listening to this, you're interested in real estate, or you're just starting the process, but pre-approvals mattering more than predictions. I think that answer is simple. Pre-approval tells you exactly where you sit, what your purchase power is, and what you can do with your money and when. Predictions, we all know how that goes. We've been dealing with predictions for the last 5 years, and it's just turned to absolute garbage most of the time.
90% of the time, I confirm with my clients, what can you afford? Well, I can afford X amount. Okay, how do you know you can afford X amount? And if the answer isn't, I've spoken to a mortgage professional, or I've talked to my bank and they've told me I can afford such and such, or I've done it like a year ago. I had some clients that were looking last year. Some life circumstances changed. They paused their search and recently reached back out to me to go look at some properties. The first thing I asked was, have you spoken to your broker again and gotten a more recent pre-approval, right? Because rates have changed. Sometimes the stress test changes and things of that nature. Maybe your income has increased. Maybe you've inherited some money. Maybe you've been gifted some money by a family member or things of that nature, right? And that can drastically change. I've had clients before where we started looking at homes at $600,000-$700,000. They couldn't find anything in the neighborhoods that they wanted to be in, and within a year they came into some additional money, or parents were able to help them out, and the budget almost doubled, right? So you could also be in an entry-level position where you're working really hard while you're also completing like a master's degree, and then your income could go from $80,000 to $120,000, right? Which greatly increases your affordability. You might end up finding a life partner that you click with within a year, and all of a sudden now you have 2 incomes instead of 1 to be able to purchase a property. And Maybe you go from looking at like a 1 or 2 bedroom condo into looking for a house with that person. So pre-approvals are massive, just so you know what you can afford and you know what you can work with, and you're not looking at homes that are absolutely out of your budget at the time.
Yeah, and that's the thing. Like, everybody has that dream when they start looking online for what they assume that they can do based on maybe like a fake, well, not a fake, but a mortgage calculator online without the real truth of their affordability. And, you know, I've got a few going on right now where one came in lower than what the buyer wanted. One came in like way higher than what they thought that they'd be approved for, which is always good. And they don't need to spend that much, but they're good. So yeah, do it as you go. And how to shop smart while waiting for better rates. This is an interesting comment. Shopping smart while waiting for better rates. Now, I don't agree with this, because waiting for a better rate is just kind of, I think that's so passé. They're not, the rates are okay now. You're doing all right. And if you find something that you want, just make sure that the payment works for you. And that goes into buying the payment makes more sense than waiting for the market, obviously.
Yeah, so I mean, you're buying the home, right? So like, there's people that bought during COVID that were willing to pay significantly more than what an actual home was worth because the payments were really low, right? But then they're kind of stuck in the problem you're in now, where if you're on variable, your payments skyrocketed pretty quickly. If you were smart and locked in a really low rate, you're coming up for renewal soon, and you know your payments are going to be going up, and your property value has likely decreased during that same period, right? So, you know, it just kind of depends on how long you're staying in that home, but there's opportunities are always going to be available whether the rates are low or high, right? Generally, I think we're kind of in a bit of a unique timeline here, because usually when the rates are lower, they're decreasing, prices are creeping up. But at the moment, we're seeing rates decreasing and prices going down.
Yes.
And eventually, once that hits the bottom, I think we'll have, not sure when that'll be, maybe towards the tail end of next year, maybe early part of 2027 when things bounce back. But I think it'll bounce back pretty quickly, right? Before, people were bidding against 20 people to get a home just in the last 3 or 4 years. But now there's so much inventory and things that are available. People are like, well, actually, no, I don't want to buy, right? So that mentality and that sentiment doesn't really make a lot of sense. Why would you compete on a property unless you had to buy, right? Like, I bought because I could and I wanted to, and I didn't really care too much about the price because I needed a home to live in. Mm-hmm. So everybody's situation is a little bit different, but why would you? I can't see too many reasons why you wouldn't want to buy now, because the rates are pretty balanced. They're not going to go up like crazy or go down like crazy, which I think is what most Canadians and even myself want. We want to kind of reduce the variables and the variability of our payments and things of that nature, or be comfortable within a certain range. Like, if the rates go up 1%, it's not going to kill me. If they go down 1%, it'll help, but it's also not going to make me retire earlier. It's not really going to change how I'm living my life, right? So I think that's an important thing to consider, right? And there's a lot of homes now that you wouldn't be able to get into that you can now get for $200,000 or $300,000 less, especially in that $1.5 to $2.5 million range, which are an amazing opportunity, right? You get into them now, and you know, you just kind of hang tight, build up some equity.
Well, yeah, and I think most of the buyers that are buying in that bracket, they're staying. You know, they're not going anywhere for like 10 years.
Yep, unless you have to move, right? We've had a couple of our clients relocate where, like, rather than you put it up for sale, if you don't need to move, you just stay in the house until you kind of get the price that you want, right? So, but this is kind of one of the things that Greg and I talk about often is, you know, it doesn't hurt to put in an offer, and then
always put in an offer.
Well, then you'll just kind of know what they come back at, right? Like, if you offer like very, very significantly below asking, they might just tell you to beat it. Or they're like, an offer is an offer. We're motivated to sell the property. Let's give them a counter. And if the counter is a decent price drop based off of where the property's priced, you might be able to kind of meet in the middle or put something together. And then sometimes if they come back with a pretty aggressive counter, that kind of also gives you an answer of, okay, we're probably not going to be able to get close enough to be able to make this deal happen, and you move on to the next thing, right? But there's not really a harm in trying. On the other hand, if you really like a property, you don't want to lowball somebody because you might really upset the seller, and then they might just not want to work with you, and if they're not in a position where they have to sell, even if you come back with a reasonable offer, they might just feel disrespected. Real estate's an emotional game, whether you're buying or selling, right? So,
But you always got to try.
you got to do a lot of the time. You have to try. It's a good way to
We're
put
trying.
it.
At the beginning of the episode, I feel like I was saying we're not trying, we're only doing. But now we're trying from the buyer's side. The buyer's side, you try. Sellers do not try to list at the price that you want to test.
They
That's
do.
what it was. That's what
Yes.
it was.
Try as a buyer, do as a seller.
Yes. Yes.
New motto of the show.
Yes. To try to buy. Do to sell. I wish there's got to be a better one for that. Okay, sellers. Why pricing now is smarter than chasing last year's comps. We already went
Covered
into
that,
detail
yeah.
on that pretty heavily.
Mhm.
How to prep for buyer hesitation. Yeah, we did a pretty big section on sellers here. Prep for buyer hesitation. That just comes down to price, right? Like I have our clients in Rockland. We're listed now at the same price they paid for it 3 years ago, and they put in about $40,000, right? And we're getting nothing, and that's buyers are hesitant. And again, it's like I was saying earlier too, especially in the east end of the city. I don't know what we're going to do with that because basically, according to the way the market is now, that's going to turn into like a 660 maybe at a 690. So it's tough conversations preparing sellers on how buyers are going to perceive their home or why they're not going to be interested in it, right? But of course, as we know, it always comes down to price.
And I mean, the buyer hesitation component, I just kind of touched on it on the last point we made there, but when it's kind of like being in a restaurant where you have like 50 options on the menu, right? Sometimes there's way too many options and you can't make a decision, right? So buyers are like, oh, well, maybe I'll just wait around and something better will come up. And often I would say maybe that's not the case, but I'm like, I can't honestly say that anymore. There's so many homes coming up for sale, and I'm like, maybe it is a good time to wait, right? Depending on the amount of homes you've seen, but if you're in no rush to buy, well, there's obviously great opportunities. So I would just say there's singular houses that are coming up in neighborhoods that don't often come up for sale, which I think are amazing buying opportunities. But if you have like 20 or 30 homes for sale in a particular neighborhood, in those cases, there's no need to rush, right? And if you see the prices trending down, maybe wait a little bit longer, but you never know when it's going to turn and start going the other way, right? So if you find the right home that you can see you and your family in, put in the offer 20, 30K less. So price in the price decrease that you think might come in the next 3 to 6 months and just try it. And maybe somebody
that's good advice.
Maybe somebody just wants to get out, so just price in a decrease that you're forecasting in your head, or that the professionals in your life, your mortgage brokers, your banker, your realtor kind of see, and then go with that. And if it decreases to that point and you're paying fair market value for it anyway, and if it starts trending upwards, you've just made basically 30K right off the bat. So I think that's a pretty smart way to approach it.
I think it's good to point out here now that in Ottawa, there's currently 4,388 properties for sale of all styles. That's up 19.5% from a year ago. We're at 4 months of inventory as of the end of September.
Massive numbers.
This is big. We haven't seen this in forever. So if that doesn't tell you that it's a good time to shop, if you want to buy a home, I don't know what else to tell you. And especially as we go into these late fall, winter months, the prices in Ottawa now are almost to where they were last, let's say mid-December to January. I'm seeing anyways in certain neighborhoods. And I think that's going to go down a few points for sure over the winter before spring will obviously rebound a bit. But
yeah, and I mean, even looking at the stats for the last 7 days for residential freehold, so for single family homes, there's 5,704 new listings. Of those, there's been 2,346 price reductions. So almost...
That's great. Is this for Ottawa? This is Ottawa.
This is for Ottawa. So basically about 30 to 40% out of the new listings that are kind of coming out, you're seeing basically 30 to 40% that are decreasing in price. And then you're also seeing almost 1,000 expired listings. So almost 1 in 6 listings. The typical listing time in Ottawa, I think, is around 90 days. So basically 1 in 6 homes are actually not being sold and expiring and not being sold within that time frame. which is a pretty significant number.
The best time to move, guys, listen. The best time to move isn't when the market is perfect. It's when your life demands it. Keep that in mind. Thanks for listening. Greg and Luca. Next week, we will have a special guest, Chantal Lafontaine from the Lafontaine Group. And we'll get her perspective on things. And we'll get into some heavy rental information.
Yes, exactly. Chantal is a rental expert here in Ottawa, so I think she'll be able to tie into some of the topics we discussed today and provide some great insight.
Thanks for tuning in. We're grateful to have you with us. Please like, share, comment, and subscribe. If you are looking to buy or sell in the city of Ottawa or just want to talk real estate, you can find our contact information in the notes below. We'll see you next time.